take a short, we're not going to be delivering from anything, right? I mean,
No.
there's no gaps up there, so it's
Yeah, no, no, no. That's the risky part of it.
yep.
The reason I'm looking at this as like a potential reversal is because we hit the -4. So
Oh, okay.
typically we get reversals after we hit -4. If not, then I have zero clue where we're going because yeah, we might just be bullish and we might just continue to go up for the whole rest of the day. But yeah, another reason why too is because of time, right? We'd expect the Judas swing to happen at 10 o'clock. So if we were going to reverse, it should happen now.
Okay.
You see, next time I got to pick one of those six trade one-on-one days. I heard you talking about you had one like six trades
Yeah,
in the morning.
yeah. It was I think it was earlier this week.
Yeah.
Yep.
It was three break evens, and then we had a winning trade, and then a losing trade, and then a final winning trade.
Yeah.
Hey, today could be that day, you know.
We'll just take two winning trades and we're fine with that. We'll be done.
Sure.
That's our max to prevent our consistency rules on Apex. So
So here we've dropped 12 points on this most recent swing, and 90-ish would be like our, know, like inverse level. So
Yeah.
we would need to see, this 30-second gap get inversed in the next, what? If there's four candles that have already been created, it's 10 candles total for 5 minutes. So six candles we have for good momentum still.
Oh, got you. They clear through in that.
But yeah, this gives us like a nice break even point, and then we've hit the -4, so we probably should see like a reversal here. We have 10 a.m. We have like a good like mental number that we've hit at 21.6. So
yeah.
In terms of like this is, we're reversing at an all-time high kind of thing, right? But it's the hit the four
yes,
the
here I'll draw it out again.
yeah.
So we have this last manipulation like before the up move.
Yep.
Okay, and what you can do is you can draw out the standard deviation tool
Yep.
up to -4, and then once we hit -4, you will usually see a reversal after that. The way that it really works though is if you hit -1 and you don't see a reversal there, you can anticipate -2 to be hit, and then if we blast
Yeah.
past -2.5, then you expect -4 to be hit.
Gotcha. All right. So momentum has slowed down. So now on that 30-second, we'd need to see it come out, form another leg, and come down with momentum, right?
I would just need to see price inverse the gap by 10 o'clock. If we got the inverse by 10 o'clock, that's good enough momentum for me, right?
Okay.
Because
Gotcha. Okay.
that's 25 points in 5 minutes.
Okay.
I know it doesn't look like 25 points, but it
Yeah.
is, yeah.
And so, other than while we're waiting for momentum, what else, like, why do you like this? So, first of all, let me ask you a question because remember, we only do live plays, we're not eval
Yeah.
traders, right? So, is this a live play for you or just an eval play?
This would be like a live play for me if like this candle close was like really good.
Yep. Yeah, it's gonna have to happen here pretty quick, right?
Yeah.
But then, so what else makes this a, what factors make this a live play for you? Because like there's another gap right below on a different leg, right? On the 32nd. They're just to the left, there's another gap, right?
Yeah. Well, to me, it's how fast you can go to break even, right? So,
Okay.
and also the risk to reward, and just like that, this would make sense as far as time goes for like a reversal.
Yeah. Okay. It looks like it's not cooperating.
Nah, the draw and liquidity also like with the
Yep.
data wick also makes sense for
Yep.
a potential trade. But when we're bullish like this, like it's just gonna keep going up. I feel like maybe I missed news or something. Like obviously we had FFP, but did we have something at 10 too? We just had UFM consent or consumer sentiment. So um, yeah, not really anything important. Just orange folder.
Yeah. Yeah.
But yeah, now that we've made this wick, this gap getting inverse like this would also be fine because we put it in a new
Yep.
leg. So we are kind of getting this accumulation though, like I wanted, right?
Yeah.
So
Yep.
if we were to continue chopping here, that would be fine. And then getting that obvious manipulation leg up and then inversing this gap, that would be fine by me.
Okay.
So if we start chopping here, right, which makes sense after distributing
Yep.
up like this, and then price continues to run higher after 10 o'clock, at around 10:15, I'm gonna start assuming that this has become a trend day, right?
Okay.
And that can sometimes happen on high impact news days, just because the surprise or whatever from the news.
Yeah. They're worn out from news, so they're resting.
Yeah.
So at what point do you become disinterested in that gap?
If we
Right.
put in like a better gap above it,
Okay. Right.
if this is the gap that continues to support price and there's no other obvious gap above it, then
Yeah.
it's still like the gap that I'll focus on. Also, if we start to like really pull away from it and it becomes like irrelevant in terms of time, like if this is
Yeah.
like an hour later, then obviously I'm not going to care about it.
Okay.
I mean, if it's like 15 minutes on the 32nd, if it's 15 minutes later, is that still interesting or is that sort of too far from a time perspective?
Um, it really depends on like how many times we like basically tap into it. So depending on how many times we
Okay.
tap into it will kind of show its importance as like a gap in price. But if we just tap into it once and then go back up, like I'm not going to care about it in 30 minutes from now. If we tap into it 4 or 5 different times and then finally inverse it like 30 minutes from now, then obviously I'm going to care about it more.
Okay. So if it's been tested a few times and then you sort of blow through it, that's a good thing, right?
Yeah. Yeah. Because what that shows is that this was like a really strong, bullish PD array. And whenever a strong bullish PD array gets inversed, you can anticipate lower prices. I think we have a bearish SMT here on this wick. So the 959 candle. It's actually this wick.
When you're doing bearish SMT, you're doing 30-second on the NQ and 30-second on the ES, right? They're always the same time frame that you're looking at.
Yeah, I was looking at the 1 minute, but yeah, pretty much the
Okay.
same time frame. So this is when I would start thinking, okay, this is bad PA. We're clearly accumulating. Price isn't
Yep.
correlated. Looks like ES is moving down while N keeps moving up. So yeah, it looks like we haven't missed anything according to the trade recap.
Oh, is that right? A little movement downward.
So we need to see this gap get inversed by 10:09 now.
Oh, gotcha. All right. And then in terms of break even, right, there's a swing low like that you got down there with inside of a fair value gap, right? So at the when you are when there's a let's pretend for the moment there's no swing low um below the let's pretend that's not there,
Okay,
right? The prices. So but there's a gap there, right?
sure.
On a different leg. Would you go to break even
Yes,
at the edge of the gap, like as
yes,
you're entering that gap?
yep,
Okay, all right.
yep. We
How
took this low, by the way, on ES.
okay. We're we were moving there pretty good for a second. Um, how far away from your entry does the swing low and or gap need to be, right? Because I mean, if it's too close, you can't go to break even because you'll just get stopped, right? I mean, it's like,
Yeah.
so how far does your break even target need to be from where you get into a trade?
So there's not really like a set amount of points it needs to be, which I'm sure you're
Yep.
not happy to hear that, but it's it's essentially like, is there a gap or something in the way that would cause price to potentially come against me in the trade, right? So in this
Yep.
instance, imagine we have a swing low that's only 2 points away from our entry point here, and then there's
Yep.
just chop here, right? And then the
Yep.
gap, there's not like an obvious liquidity point below that for another 8 points or so, right? Obviously,
Yep.
I'm not going to move my stop to break even at that ITL because there's nothing in the way that would cause price to come back against me, right? But
Ah, gotcha. Okay.
let's say
Yeah.
we entered a trade and then there was a gap right at the low that we're targeting as our break even point, and it's
Yep.
only 3 points away. In that instance, I'm moving to break even, and I'm just chancing the fact that
Yep.
that the
Okay.
trade might not work because
Okay.
Yep.
if we have some spot in unfilled liquidity that can cause price to move higher, and the inverse is really the only thing that's telling us that price wants to go lower. I'm not going to gamble the two, like trying to figure out like which one is the correct PD rate to take bearish,
Okay.
because the probability that either works here, whether it's the unfilled PD rate to go long or the bearish PD rate that caused us to go short in the first place, it's just better to like get some more confirmation instead of trying to basically like say like, okay, this bullish gap is going to break for sure.
Yep. Yep. All right. Well, we're forming another chance at momentum through the gap, right? Because we've pulled back out again.
Yep, and it's going to be 10:09 in a minute, so not
Yep.
good enough momentum.
Yep. Now, but like this pulls out, then we restart a momentum clock if it goes back, starts going back down again, right?
Yeah. Yep.
And like this, like so, yeah. So we just let's pretend price keeps going the way it is, right?
Yeah.
Would you start momentum counting again on this red candle?
Yeah.
Okay. So even though we didn't sweep the previous swing high, right? We're starting a new we came back out like 3, 4 green candles, and now if we get a red candles that get back through that in a short enough period of time, right? We're back and interested in this gap.
Yeah, we don't. I mean, it doesn't have to necessarily be a swing high that we form. It just has to be an
Yep.
ITH. So here,
Okay.
an ITH would be if we close this candle below this candle.
Yep. 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 In terms of sweeping liquidity, right? So like if we go to the 15-minute chart and we kind of highlight the key levels, swing highs, lows, whatever on that chart, um, how do how do those count in from a liquidity sweep perspective compared to say an equal high on the chart? Let's say we're trading the 1 minute, right? And we have equal highs. We know we like I know Donji likes to sweep equal highs right before
Mm-hmm.
inversing a gap. Right? Like if the sweep is equals, he likes that more than if it's just a swing, right? So if it's how strong are higher time frame swing high lows, right? When you're looking at either sweeping or liquidity targets, I guess.
Well, they're definitely better than like the lower time frame. So,
Okay.
like in terms of like the hierarchy of like liquidity draws, like I think data wicks are like the most important, and then
Yep.
multiple stacked like highs, and then just normal like equal highs, and then unfilled like PD arrays like higher time frame daily gaps and 4 hour and 1 hour and whatever, and then after that
Mhm.
it would become like higher time frame highs and lows like
Okay.
daily highs and daily lows, and previous day high and previous day low is always going to be a good draw too. So
Okay.
that's about it. But yeah, as far as like a sweep before like a move, I'd say like you'd want like just like any sweep delivering out of anywhere is good, right? Um, I mean, obviously like an internal like
Yep.
an ITH isn't as good, but any external sweep or any time we take equal lows in an external, you know, point like that's always going to be best.
Yep.
Well, it's getting to that point where I'm starting to think we might be in a trend day. If we start to close over these highs with good momentum, it's probably a trend day.
Yep.
Is this now the second time we've had a trend day when we've had a one on one?
Yep.
All right, guys. Well,
Yep.
I think I figured it out. Whenever we get into a one on one session together, I'm just gonna start buying longs at whatever the
Yeah.
mini duration
Exactly.
leg is.
We're here to help. Yeah.
Appreciate it.
That's just like whatever trade Mike takes, I usually take the opposite because he's, and
Yeah.
vice versa. So we're each other's liquidity. So the
Oh,
net sum's
nice.
not great, but it works. So
Yeah, you guys knock each other out and then have to both pay commissions.
exactly, exactly.
Got another bearish SMT here.
Yep.
I think I'm gonna have to get off PM early today.
I couldn't remember. Was this a
But
on
this is
week or
your
an off
PM
week?
off day. Yeah.
No, this is our on week this week.
Okay.
So yeah, I think I'll be on until like 3:30. I gotta go look at a property.
Oh, that's right. Last week was Thanksgiving Day. Yeah.
Yeah. It's unfortunate because I the way that I structured my schedule, I could have technically taken 3 Fridays off in a row if I would have taken the Friday before Thanksgiving off, and then I probably
Oh
would have
yeah.
traded on Good Friday, right? Because it was a half day. Oh wait, no, I couldn't
Sure.
have, right? Because the market closed at 1 that day. So
Yeah. Market was only open half day. Yeah.
yeah, so
Look at
theoretically,
the
I
30.
oh sorry,
Look at the 30-second. There's a couple of gaps,
yeah,
right? So like there's two gaps together, right?
sure.
Um, how like
Interested in short would we
yeah,
be?
I'd want to wait for this gap to be broken because this is the gap that's
okay,
supporting price, right?
gotcha. Ah, okay, all right.
And obviously, like this is a higher quality gap than these ones are because it's singular, right?
Yep, yep.
Okay.
I was looking for something singular on the other time frames
Yep.
because
Yeah.
I thought the momentum up would have been good enough to put something in on the two, but we didn't have enough time. If we put in this as an OB on the 2 minute, this is for sure going to be a trend day. Maybe we get a reversal at like 11, but there's nothing telling me right now that price wants to come back down.
No.
I know we talked about this last time, but you don't use like order blocks to like do you use them like for bias, but not necessarily for like supporting your entry? Like, does an A plus setup need a or how does a order block help, right?
Yeah, so it's like that
Setup.
1 minute we took yesterday that had the order block
Mhm.
with it. It just
Yeah.
improves the quality of the trade, basically.
Okay.
It's not something I'm
Right.
ever going to enter off of on its own, but if I get an order
Right.
block entry plus an IFEG, like obviously that's better. It's kind of like whenever we get an IFEG off of a unicorn setup, it's like okay, that's another thing that's supporting my thing in price or my
Yep.
bias towards price. Or it's anytime we get like an IFEG off of like a 50% retrace, right? So anything that's going to help support your bias is a good thing to include in
Yep.
your trade.
Okay.
Because like with that trade yesterday, we didn't have like a S&T or we weren't delivering from some gap or whatever, but we had like the order block there, and it was super obvious, and it was like pretty clean in the way that we inverse. So that's what gave me the confidence to take that trade because of that one little thing.
So one of the challenges I have with order blocks is it seems like there's order blocks everywhere, right?
Yeah,
So it's like there's there's almost never not an order block kind of thing, right? It's like, so how do you look at the quality of an order block? Because right, there
yeah. So they
there
usually will.
seems to be.
The best ones will form at like swing lows, and the best ones are usually singular with the bodies that are like way bigger than the wicks. So like I know I keep going back to the example, but it's mostly because it's so good. Like it's exactly what we
Yeah.
look for. But this is a good quality order block. Okay, it's singular.
Okay.
The body is way bigger than the wick. It formed itself at a swing low. And then obviously like this is like another one that would be good, right? Is this one?
Yeah.
Because it forms itself at a swing high, so this would be like a bearish order block, and it's formed in a singular candle, right? So this is an entire block of orders formed in two candles. Um, this one not so much, and I bet you're saying like why, and the main reason is
Yeah.
because the candle itself isn't as big, um, and it's not formed at like an obvious swing high, right? So like this is an
Yeah.
obvious swing
Okay.
high, this is an
Gotcha.
obvious
Okay.
swing low, but usually you'll find the best ones around there. Obviously, you can find like good ones like in the middle of the range, but the ones that you're going to use that are going to give you confluence on entries are going to be at the swing lows
Gotcha. Okay.
and
Because
swing
you're going to
highs.
get an order block and an inverse, right? That
Yeah.
are at the same, using the same swing high or swing low to, right?
So like this is like another one that's I would consider good, right? I bet you it shows up on the 2 minute. Um, where'd it go? Was it this? I hate how TradingView does that. I don't know like
Moves you
why.
to a different time.
Yeah, maybe it was further back. Yeah, it was right here. I don't know. Okay, so this is Wednesday at 13. All right, let's see. Yeah, so this is so obviously the wick here is bigger than the order block, and
Yep.
really like this is like the better order block to use. This would be more like a prop block, but technically like this isn't a good order block either because you have like multiple down close candles above it. So really this is your order block, right? It's all of these down close candles that are
Yeah.
formed as soon as you get like this close, and you can see what happens when price retraces to it. We get that immediate reaction back up. Um, but on like the lower time frame here on the 1 minute, this candle here kind of forms like these two 1 minutes as like an order block.
Yep.
And then this, you know, candle, these two candles here form another order block on this candle close. And so whenever you have an order block off an order block, this becomes a prop block. And what you'll notice is that these order blocks are actually formed off of a swing low, delivering out of a bullish or value gap. Actually, wasn't this the 30-second we took? This
That
was
was
the,
1 minute.
this was the
Yeah.
30
Yesterday?
second. No, 2 days ago we took this. This was the 2 minute here,
Oh.
the 2 minute BPR, right? Yeah. So this was actually the trade we took.
Yeah.
So that makes sense why I'm like referencing this now. I just realized.
Yep.
Um, Yeah, this was high quality. So you had the prop block, you had the 30 seconds. So yeah, this is what you're looking for. You're looking for the order block to be created at the swing low. So we have this order block and then this, and then obviously like let's find like just like what could be classified as an order block, but like isn't a good one to use. So like even like this is decent, right? Same thing with this. This is actually decent too.
At 11:50, right? Is there an order block?
On Wednesday,
Yeah. So you have those. You have no, not a right. There's two. There's the two.
these ones,
Yeah, those two candles. Yeah.
yeah, this is not a good order block, right?
Right.
Because it's
But
not
it's
an
an
obvious
order
swing
block,
low.
right?
Yeah, I mean you would have to classify it as that, right? But like this is like a bad
Yeah.
quality order block
Yeah.
because the
Okay.
wicks are bigger than the bodies, and it's not in an obvious
Yep.
swing low. It's in the middle of the range.
Yeah. Okay. No, that helps, right? Because it's like, and that was part of the problem. Is like, Did you say, oh, and we have an order block, and like I'm like, there's order blocks everywhere. So how do you decide what a good order block is versus Oh, go back to the right a little bit and up. Let's see. Hold on. Stop. 11:10, right? 11:10. There's the green. Yeah. So is that?
So this isn't as good. I like that the body is bigger than the wick, and I like that it's very obvious. But it's
Yep.
in the middle of the range. It's not in a swing high or swing
Yep.
low. So
Yep. Okay. But that's better than when we just looked
yeah,
at it, but it's still not swing high, swing low good, right?
this I wouldn't use in confluence with an entry, but this I would use to trail my stop. So like
Okay.
ideally, like price shouldn't violate this if we're bearish, okay? And
Yep.
when we do, we're probably anticipating higher prices. So
Okay.
this is like that order block. Like let's say there was a 30-second IFEG here, we got that.
Yep.
I'd enter, go to break even here, comes back up, doesn't hit our break even stop, and then makes a lower low here. We get the order block. I'm
Yep.
for sure moving my stop to
Gotcha.
profit above this.
Yep. Okay.
But yeah, we're just still way up here.
We've been hanging around up here a little bit. On the 32nd, there's a small gap up there. We're not interested in that just because there's really nothing else going on. Is that right?
You're saying this one?
Let's see.
Yep.
Yeah.
Um, yeah, I wouldn't really take it as an inverse because there's nothing else telling you that price wants to reverse here. You need something like more than just this to indicate like a reversal, right? You need like a 5 minute or something else related to time or like a macro. Because now if we got like a reversal in the middle of like, the 10 o'clock hourly candle, like that doesn't really like signal anything, right? Like typically reversals will happen during macro times. And so like here, when we were looking at this reversal here, we were between the 950 and 1010 macro. And so it makes sense to like get like that Judas swing up and then, oh, maybe we get the reversal here. But now that we've kind of trended up and price is super uncorrelated and we're like in bad PD or not bad PD, bad PA, I would want to see something more obvious than just like how big is this gap?
Okay.
3 points basically. Yeah. Oh, the other thing is too, it's like just too small.
Gotcha.
I mean, it would suck to see it work, but we've had multiple SMTs fail now. So like this was an SMT that failed, this was an SMT that failed, and now we have another SMT here. ES is just making lower lows while or NQ is making
gotcha.
higher highs. So actually, this first one wasn't an SMT, but the second one was. Ryan's already texting me asking if we're playing Fortnite after this because we have the new season today.
Uh,
All right, so this is what I have as far as questions so far, or stuff to just write about. I
yeah.
have how to use premium and discount when entering a trade, how to tell when PA is going to get good before a trade, how to use risk reward to your advantage, when to use gap for an inverse, and when to move your stop to break even. Like what specific qualifications?
Yeah, and then I think we got a lot of the answers from you already, right? But yeah,
Yeah.
because order blocks, right, is one of the big ones. But that, like, you've given us pretty good
Yeah,
information on that
good
live
quality
here.
order
So
blocks. Sure, sure,
yeah,
sure.
yeah, exactly.
All right. So yeah, I have those 6 things to write about, and I'll try and include like examples too from the chart in
Okay,
here. And then I've been recording for the last 30 minutes too, so I'll make sure to get that up,
okay.
and then give you guys each a free month, and then I
All
think
right.
that's it. Yeah, I'm trying to get all my ducks in a row because I got a lot to do today.
Well, hopefully this will bode well for some afternoon, you know,
Yeah,
uh,
maybe we'll leave the
perspective.
data week behind and we'll be able to target it during PM. That'd be cool.
Yeah,
Yeah, we got a little room to move to right now, so yeah, it's
yeah.
So yeah, no 1 minute, obvious bullish gaps here.
yep.
Just not really good
Yeah,
price action.
yeah. Are your one-on-one sessions booking up pretty well now?
I usually get like 3 to 4 a week.
Okay,
Yep.
Um,
that's pretty good. There's only five possible, so
yeah, it
pretty,
just it kind of depends on the week. Next week I have 2 bookings already, and I have this
yeah.
one dude that wants to book me for like multiple sessions in January, and
Oh,
um,
yeah,
I don't know. I don't really pay attention to it too much. I just focus on PM. I kind of like being able to just have my morning free, so I can trade and then have my
yeah,
mind fully clear for PM. But whenever I have like a one on one, I'm like, oh, I have to get these notes done, and then I have to do this, or I usually have something else throughout the day that I have to focus on top of trading. And
yep,
sometimes it feels like a lot, but most of the time I know like I'm very like in a privileged position, being able to
yep,
do this full time and trade and everything. So
yeah,
um,
yep.
I'm not going to sit here and complain about doing one on ones, especially when they're with chill guys like you. So
You could make it easier on yourself by moving to West Coast because then your trading day is over right at 1 o'clock, and you have
true.
it starts a little early,
It is a little
but
early to get up, but yes.
yeah, especially for a 8:30 news day, right? Because even so, it's like when I had a regular job, I was up somewhere between 5:30 and 6 anyway to go to a job, and I
Yeah,
wasn't done at 1 o'clock, right? With a 2-hour break in the middle. So
Yep.
it's not a bad lifestyle.
I
And like I said, the West Coast gives you a whole afternoon to do whatever. So
I actually when I got my first 5 figure payout, I was actually down in Puerto Vallarta, down in Mexico. Right, my family used to hang out there over the summer. My
Nice.
great grandparents did. They had a place
yeah,
down there, and then obviously they retired and they sold their place. But we used to
yeah,
go down there, and we went down just like for a family vacation because we hadn't been there in probably 10 years. And so while we were down there, I would wake up at I think like 7 because the time difference was like only 2 hours behind Eastern,
yeah,
and so I'd
yeah,
be waking up at basically 9 Eastern, and then by the time I was done trading, it'd only be like 10 o'clock, I think, or like
yeah,
9 o'clock or something like
yeah,
there,
yep,
and everybody would just be waking up, or they wouldn't even be awake, and I'd already be done, and I had made
yep.
like I had made so much money that week down there. It was actually crazy. I made jokes with my family. I was like, I probably could have paid for the entire vacation just with the the money I made from trading because it was so nice. Like I had no urge to like stay on the charts when I was down there at all because I would like I'd get my one trade in, just
Yep.
chilling in the bed, and then
Yeah.
there would be so much stuff to do when I was down there. Like I could go to the beach, I could hang out with my family, I could do whatever. And like here, when I'm stuck in Michigan in the cold
Yeah.
and whatever, it's like,
Yeah.
well, I can either be on the charts or I can go hang out in the Meyer parking lot with my friends. So
Yeah.
but yeah,
So yeah, so there's another concept that we don't understand, which is the limiting the number of trades per day, right?
okay,
Like a lot of, Dodge would be like, and he drives many people nuts with this, but he's like, I took my one trade before we got on and I'm done for the day, so I'm not taking any more trades for the day. But then he keeps taking trades. So yeah, that's a whole different thing. But if you have a profitable, right, strategy and like for what are we if we have two losses we'll stop for the day, right? Because
mm-hmm.
there's a chance that either we've completely misread the whole thing or that it's just a bad day, right? Like
Yeah,
price can be bad, but like what's your view on like, because I think you said you generally get 6 to 8 trades a week,
yeah.
right? um but is that like if you have a win, do you keep going? If you have a loss, how do you approach that part of, number of trades you take, trading the 2 sessions that you trade? So,
Sure. So I'll chunk this up into two explanations. I'll kind of chunk it up into like what I personally do and like the reasoning behind taking one trade. So what I personally do is I'll trade one set of fundeds that I have, and I will take the one trade. And if it's like a break even trade, I'll keep trading on them. If it's a win, then I'll be done. If it's a loss, then I'll be done. Okay. And
mhm,
then I'll switch to a different set of funded slash evals that I have. Right. Usually, what I'll do is I'll copy trade and I'll have like two fundeds and then like whatever evals I'm working on with that set of fundeds. Right.
yeah,
And then I'll trade those. And usually after one win, I'll be done with that. And then if I see anything else that's like really good, I'll take it on eval. Right. The main reason for taking one win and getting off after isn't necessarily because the model's unprofitable and you need to be done trading or because it's whatever. The rule is set mainly for psychological purposes, right? If you have the best psychology in the world and you're not going to fall into bad habits by over trading or whatever, then sure,
yeah,
you can take as many trades as you want during the day. But the majority of people, after taking a loss, will become emotional. So limiting the amount of trades you take is going to prevent the amount of opportunities you have to take a loss, which is going to prevent potentially worse outcomes as a result of taking
sure,
that loss, right? And so that's the
okay,
main reason why Dodgy and even I preached only taking one win and then calling it a day.
yeah,
And that's the case for like most rules that we have in you know for the model. I mean, obviously, some of them are in place because we know that those specific things make the model profitable. But a lot of the other rules that we have aren't even related to the model, like moving your stop to break even. Okay,
yep,
that's not necessarily something that you have to do to keep the model profitable,
yeah, right,
but it's going to foster better trading psychology, which at the end of the day is even more important than having a profitable model. Having a
yeah,
profitable mindset, being able to retain your mental capital for as long as you can throughout the trading day, and being able to have good psychological habits is way more important. So that's the main reason why he says to take one and then be done, but then he'll
yeah,
trade afterward. It's because
right,
his psychology is pretty solid, and obviously you're going to be able to have a much easier time with having a good psychology when you don't have to depend on trading solely as your income source,
right,
right? Like you're able to
yep, yeah, yeah,
focus on other things and
yeah. So I guess yeah. Basically, the thing is like if you have a loss, you're going to be affected emotionally. If you have a win, you're affected emotionally, and you don't want that to judge your evaluation of a potential trade,
exactly,
right? Like
exactly,
you win and you're like, oh, I'm good, and you see a trade setup that's not that good, so you're like, yeah, but I'm good, so I take it.
exactly,
Or you lose and you're like, oh my God, I got to get it back. So you take a setup that is not one you would take if you had a clean slate,
Yeah,
basically, right?
let me check your doc real quick. I'm pretty sure I included the psychology thing, right? I said,
Yeah, yeah.
yeah, I said, uh, no, I didn't. I didn't include that. Okay, so one
Oh,
thing that I've included in other people's notes when I
yeah,
talk about psychology is like oftentimes traders will attribute their wins or losses to skill when in
yeah,
actuality it's probability and basically luck, right? So what'll
yeah,
happen is, like you said, they'll take a win and then they'll attribute their win to their skill, like, oh, I'm so good at reading the market, and then they'll end up over trading, and then they'll end up chasing their losses or revenge trading or whatever, and then that's when
yeah,
you see blowups of accounts and whatever. So that's the main reason by limiting the amount of trades you take, you limit the amount of opportunity that exists for bad habits, and then
yeah.
um, you're able to, like, I guess, keep it pushing and taking more
Yeah.
trades in the future. And I've kind of talked about this in a different way before too. Like when I talked about the whole gas tank analogy and the mental capital thing, right?
Yeah.
Every trade you take, regardless of it's a win or a loss, is going to weigh on your psychology. And so
Yeah.
whenever you take too many trades, you're going to end up damaging your car or
Yep.
your mental.
This is not exciting price action. I'm just
No, this is not.
saying. Just saying.
Yeah, so on the topic of price action, like if you look at the 30-second or even the 1 minute chart, right? You've
Yeah.
sort of been just going sideways, choppy a little bit for 30 minutes here or whatever. What what does it take for us? We sort of would look for a strong move out to us to sort of break the, whether it's a manipulation leg, but what do you look for to sort of, it would say, start getting back into a trade? What would it look like?
Um, Probably just like good momentum up, forming an obvious gap, and then getting that gap inverse down after sweeping
Okay.
liquidity. So we have these equal highs here. So whether that's after taking out these equal highs or taking out the high of day, something like that, and
Yep.
then having price come back down. And ideally, I'd want that to happen during the macro. Um,
Okay.
if it happens
And the
like in the middle
macros,
of the range, then it's not going to be as good, right? That's kind of the idea behind that
gotcha.
30
So
second you pointed out.
the macro, right, is 10 minutes before to 10 minutes after each hour, right?
Yeah.
Is the macro time. Um, so when you're looking for like let's see, looking back and around 10:03, a gap formed and then was inversed on the chart we're looking at.
Uh, 10:03. This tiny one.
Nope, to the right. We formed a bearish gap and then we
This one.
inversed it. Yeah, yeah. Oh, wait, that's a big wick, huh? Let's see. What am I looking at? I think that's the one. Oh, that's a pretty small gap. Yeah.
Yeah.
Okay. All right. Pretend for the moment that wasn't a small gap, right? That it was, a
Sure.
bigger gap. Yeah. Um, in this case, right, you or well, you'd be buying
Bearish.
in premium there, right? So that's like,
I
is
wouldn't be
that
taking
one?
it
Yeah. Is it because
because
we're, oh, we didn't sweep a,
high a day
gotcha.
liquidity sweep. I mean, we're delivering out of this gap, which is good, but I mean,
Yep.
you're longing at high of day, and there's no good draw on liquidity above, right? So, like,
Yep.
assuming that this was a good gap to take, right?
Yep.
If we don't have a good draw on liquidity above, like we don't have equal highs or whatever, and I'm longing at high of day at like the highest
Yep.
point of price in the market, like
Yep.
that's just dumb. Like
Okay.
that's
Yeah.
all that is. Like it's just bad risk to reward. It's like
Right.
even if it works, like there's no
Right.
reason why you should be longing this high up.
So it's a combination of it's no. So if there was triple equal highs up there,
Oh yeah,
right? Like if there was a strong liquidity draw, then that would change your mind. But
sure.
there's just a swing high. There's like, one measly swing high that's not a big liquidity draw. It's really the problem.
Yes, correct.
Okay. All right.
Yeah, I'll always target a good draw on liquidity if it's good risk to reward.
Yep.
But if there's nothing there,
Yep.
then
Yep.
I have nothing to
Okay.
target. So
Yep. What's your experience with price action like for the rest of December, right? Is it
week leading up into Christmas sucks. After Christmas, between New Year's sucks, and then after the New Year, it's
okay?
pretty good.
Okay. We
So
got a
do
couple
you
weeks
not
coming up
trade
in
at
May.
all?
I
Do
mean,
you
I'll
not trade at
trade it.
all, or do you sort of log in and look, and if you're a little more cautious on what you would take?
Yeah, I'm just more cautious on everything I take.
Okay.
Exactly. I mean, I can't imagine this is going to be good with all-time highs price action and Christmas, right? Because the main thing is that the institutions are all taking time off, right? You know, some of them like after Christmas are going to be working into the end of the year, but nobody's like really opening like new positions or trying to like, you know, recalibrate their portfolios or doing anything like that. They're all basically wrapping up the end of the year and anticipating what they're going to do for Q1. So nobody's really
Yeah.
like buying like that, and there's no major like
Yeah.
institutional moves. It's just mostly retail and like maybe a few institutions that are like closing out trades basically for the year.
So is that then that would generally be reflected in bad price action,
Yeah,
not I mean, so the reason you get on the charts, and if you see good price action, there's no reason not to trade. It's just
exactly.
that you're less likely to see good price action in that window.
Exactly. Exactly.
Okay.
Yeah, whenever we say we think it's going to be bad PA, we're not saying that it's a guarantee to be bad PA. It's just
Right.
normally like it's not
Right.
the greatest.
Right.
Which is sort of all we are looking at. Everything is probabilities, right?
Exactly.
So,
Exactly.
Right.
Probabilities and liquidity. Those two things are basically all that I look at all day.
it's a little funny in the chat sometimes with Dodgy. People will ask him like, "Well, this one setup back here failed. Why did it fail?" And it's like there doesn't have to be a reason that because there's no 100% guarantee that if you pick the right one, you'll win. Otherwise, some guys would be insanely wealthy, right? It still is a
Yeah.
probability, and sometimes it just isn't going to work. So yeah,
But he'll always find a way to give an explanation.
he will.
Yeah.
Yes,
Yeah.
in quote hindsight, yes. The dodgy hindsight has a little different definition than the normal hindsight, but yeah, I
Yeah.
gotcha.
Yeah.
Yeah. Yeah. It's pretty funny. We'll joke about that because he'll be like, he uses hindsight, but he doesn't. He's looking back at a chart to make a decision now. That isn't like our definition of hindsight. Hindsight is looking back at a trade and saying, "Oh, look, this trade won. Here's why it won." But he looks back, but he calls it hindsight. It's just kind of an unusual terminology. It's like
He's just looking
he's,
at history, right? I mean, he's just
yeah,
taking
he's
into account the
evaluating
history.
history to make a decision now, which isn't most people's definition of hindsight. But it's
Oh, I was talking about
It's-
specifically when he like will look at a trade that's like a 3 minute and then the 3 minute loses and he's like, well, here's the reason why it lost. When like
right,
realistically, there's no real reason why it lost. It just
right,
right. Yeah,
yeah,
no, he does that. Yeah.
yeah.
Yep.
yeah, yeah. The they're not like it's not 100% win rate, so sometimes perfectly good setups will fail.
Yeah.
So
Like him blaming, for example, like yesterday is really good, or not yesterday because I guess yesterday and like a few days ago, whenever that 3 minute lost, like you know which one I'm talking about, right?
Yep.
Yeah. So that 3 minute that lost, he blamed it because we had no delivery, right? But then yesterday we get the long during PM with no delivery, and that one wins, right?
yep, yep,
So it's like, okay, he says that the 3 minute there didn't have delivery and that's why it failed, but it had the good momentum. But then this
right,
one wins and it had good momentum. In my opinion, the 3 minute just failed because it failed, right? Like there was
right,
nothing else to
right,
that.
exactly,
And it's just the probabilities.
right.
Yep.
But I
So,
think it's yeah, that's I mean, it's good that people ask that question because you're like, did I? Because some people will be like, I took this trade, Daiji didn't necessarily take it, but I took this trade, it failed.
Right.
Can you tell me why? And that's a good question to ask, and we want the answer to that, right? It's like if it's because it didn't have this thing that I need for an A plus setup is great, right? Answer. But yeah, finding an answer, and sometimes it's like, and he even says that. It's like you'll pick a trade. There was one we took, we liked, he liked, I don't remember, it was a couple days ago, whatever, and it failed. And we're like, you know what? And he talks about this. That's a good loss, right?
Yeah.
It's it's like
Yeah,
the
I
setup
mean,
was
it
good,
met the
everything, the conditions were
requirements.
good,
Yeah.
and guess what? Sometimes they fail. So
Yeah, and like the only time like there'll be like good losses is when there's really no reason like why a setup should fail. Like obviously, like
right,
if that 1 minute that we took yesterday failed, the reasoning behind that failing is because there was no delivery, right? But if we ever get into a trade and like we get everything, we get the delivery, we get
yep,
the liquidity sweep,
right.
we get the good momentum, whatever, and then it fails, it's like, well, that just fails. So I guess that's like mainly the reason why he said that like the delivery there caused it to fail because if there's a reasoning why a trade doesn't work despite all the other variables being present,
Right.
if one variable is missing, he can always blame it on that one variable.
Yeah, to your point, you can't really say, well, this failed because it didn't deliver from, because frequently there's no delivery from and they don't fail. So that's not the reason, because you don't have to have delivery, right?
Yeah, but it's a
So,
reason he can give is basically what
yeah,
I'm saying.
yep, yep.
Well, you
We
do a
do
good
think,
job in the afternoon of keeping it
yeah.
professional when Dodgy sort of dive bombs into your stream.
Oh, thanks guys, appreciate that.
Yeah,
Because he's
Nah.
usually at that point he's usually just a kid and he's just like, hey,
yeah.
having fun, and you're like, I'm trying to run a business here.
Yeah, I don't know how many people you lost on the Let's Watch Dodgy Golf Day, but his swing is terrible. Like, I don't golf a lot, but he has a terrible swing. It's like,
Hey, he's
and then
working on it. He's working on it.
well,
Yeah, I
you
didn't. I
shouldn't
don't
be
think
working on it with us.
I've only had a couple cancellations actually since the Black Friday promotion, so that's good. Usually, I think my
Yeah,
churn
that is
right now
good.
is like 20%. So like, I'll have like
Yeah,
for every four people I bring on, one person, or for every five people I bring on, usually one person will leave after a month.
yeah, gotcha. Yeah, okay.
Yeah, that's good.
All right. Well, you're not going to be able to get rid of us, so
That's good.
you're stuck.
Yeah, you guys are two valued members of our community. So thank you guys for sticking around.
Appreciate it. And you actually, I mean, we have, there's, I remember I was watching another trader one time, and he's like, there's good traders, there's good teachers, and then there's good traders who are good teachers. And good traders who are good teachers, I can tell you, are few and far between, right? And you do an excellent job of explaining. Yeah, Mitch has said this. Like we
Yeah.
understand concepts that because of your explanation that like we don't get from Dodgy, right? I think
Yeah,
Dodgy's a brilliant trader, but he's not as good of a teacher. So yeah, you are in a very small class of people who are able to, trade well, but explain well, and that's something you got to continue. Um, because that is one of your strengths is the ability to explain why something, as opposed to, you know, I can't explain it. It
it's
comes
just
from
screen
screen time,
time.
right?
Yeah, yeah, yeah. No, I, I
Yeah.
I get that. I appreciate that. I've heard that sentiment from other people too. They're like, why don't you go and do your own thing and trade AM and make your own Discord? And it's like, yeah, I mean, I could go do that and I could go, do my own thing. But then again, I'm not going to have access to as many people as I have
Yeah.
here. And
Yeah.
I mean, I have a lot more outreach and I'm able to help a lot more people by being here. And so I deal with the punches as I may. And obviously, like in
Yeah.
the past, I used to trade AM. I used to stream AM. That was my time. And when I was in the
Yeah.
jungle, that was what I did. But
Oh, yeah.
yeah, I don't know. I don't know. I try
Yeah.
and explain things as best I can, and
Well, like I said, we've been, and I've, followed other people, but like I said, there are few that are good at trading and good teachers, and you're one of those. So just keep
Yeah.
doing it.
for
Yeah,
sure.
I mean, like, for since we've been listening to Dodgy, he's told us, we know the value of equal highs, but, he's said in the past, he'll say, oh, well, those two are adjacent, those equal highs were made on adjacent candles, so I ignore them. And, he would say that. And I'd be like, okay, all right, he ignores them. I have no idea why. right? So
Yeah.
for 6 months, I have no idea why, but I just know to ignore those. And last week, you explained why you ignore those, and it made total sense. But it's sort of what's behind it, right?
Yeah.
So anyway, that's a
Then it sticks, right?
The
That's a common in teaching, right? Is that if you explain why something, it will stick. If you just say this is the rule, it's a lot harder to get that information to stick. So
I don't know why he does that, because there are like reasons why, and part of me thinks that he gatekeeps information on purpose so that he can sell it and repackage it later in like a higher
yeah,
tier,
could
basically.
be. Yep.
yeah,
And like that, I
yeah,
understand as far as the business aspect, and me coming in here and like doing these one-on-ones probably kind of eats into that a little, but like because I know he knows that, like I know that like he knows like
yeah.
the reasons why liquidity is the way it is and why orders
Oh
are the
yeah,
way they
Yep.
are.
yeah, absolutely. Yeah. All right. So on the 32nd, you're on the 32nd, right? That
Yeah.
looks like it's developing really good LR. Is that like we can't do anything with it because we don't have an entry, but it's like so
You're talking
basically
about
we
like
haven't
this
no
or
no coming down no on the top
up
side.
to the top.
Shorter
Okay.
term.
Yeah,
This.
yeah, yeah.
Um. Yeah, it's fine. Like honestly, like I wouldn't treat this as like LRLR because it's like not significant on any other time frame. Usually, the best LRLR is going to be like really obvious on like a lot of different time frames.
Gotcha. Okay.
Um, and it's going to be over like an extended move. Like like this to me is decent, right? Those three
Oh,
highs. I mean,
big.
you obviously want more than
Yep.
three,
Yep.
but like this is
Yep.
really good too. Like this to me is like, even though it's like not
Yep.
like tapping the line, like
Yeah.
these are stacked highs,
Yeah.
right? And those are eventually gonna get
Yeah.
ran, which is what you see here. Not really like obviously like it's LRLR, but it's like it's kind of steep and it's like not really
You're right. Okay. Okay.
it's just not
Yep.
good quality.
Yep.
So we're in the macro time finally, but still it's kind of like
Right. We got a big move, right? So
there's
relative,
no
well, big candle.
there's this 5 minute I guess, but it's
Yeah.
kind of tiny for a 5 minute, so and it's not really the thing that's propelled price upward. So I'm gonna keep watching
Oh,
this 30
gotcha.
second.
Oh. Yeah. All right. We just formed a reasonable size gap on the 32nd, right? Coming down.
Go
Bearish
long, you
gap.
mean?
Yeah.
Yeah, I think the 1 minute here forming would be better than that 30 second. But
So
yeah,
this is one like taking that 1 minute that's forming reliable. Like you've got this sort of crappy price action for the last hour, and then you move out of it and you create that gap that just was formed in the 1 minute that would inverse sort of back up into that bad price action. Is that bad to do or not? Is that
no,
fine?
it's not. It's fine, but at the same time, this isn't a good entry because we don't have a liquidity sweep and we're not really delivering from anywhere, and we have obvious liquidity below, like on the 5 minutes. So I
Gotcha.
wouldn't take it as like a long, but no, I kind of explained this to Mike earlier. When when we were taking, I think it was I forget what gap we were talking about, but basically, if there's a gap that exists that we inverse, and then there's a gap above it, and then there's this type of PA in the way, that's actually better than if there was like two gaps back to back,
Well, that's right. Okay,
right?
gotcha. Yeah.
Because it gives you an opportunity to find a good break even point, and there's no roadblocks in the way. Like this isn't like a roadblock in price. There's no PD array that's left unfilled that could send price lower. It's just basically liquidity above, and that's it.
Okay.
So
Okay.
ideally, in normal price conditions, what you'd see is just price run through this without stopping because there's nothing to stop it.
That's right. Okay. Yep.
So I actually prefer it when it's like that, where we get
Gotcha.
some accumulation and then we get the manipulation and then we get the distribution down, right?
In this case, would you trade the like if we inverse this 1 minute, right? That's
It's
trading
a
the
B plus
manipulation
setup,
leg,
but
right?
yeah, this is a manipulation leg. Yeah, you're right. This would be the leg, and then you would try and target, I guess, negative 2.5 here. But honestly, you want your manipulation legs to sweep some liquidity before being used as a manipulation leg. So like, if we were to come down here and hit the 5 minute, and then this turns into a manipulation leg, that would be better. we still have this 30-second gap. That was like the original gap that caused price to go higher here. But now, what's the problem? So we'd be shorting in
Oh,
discount.
that gap was a while ago. Yeah.
Yeah, and it was a while ago, but
Yeah.
um, it's
Oh,
just
short in and discount.
yeah. So
Discount of the current move, right?
yeah,
Yeah.
I mean, obviously we're in super premium, so like relative. So there's like two things that you have to do whenever you're like trying to figure out if you're shorting in premium, right, or shorting in discount. You have to contextualize it with the rest of the range. So like obviously we're super high on the day, right? So
Yep.
this isn't really like shorting in discount necessarily, but so like this would be still like a good short if we were to like get it on the basis of like discount and premium, right? Like I'm never gonna say like don't take this because
Yep.
we're in discount of the most recent swing,
Okay.
right? Because
Okay.
contextually, like with the rest of the day, we're like in like way high premium and there's unfilled liquidity below, right? But if we were inside of like a bullish PD array, right? And we were at like 50% and we got this move and it was like shorting and discount then, right? Then I would say like okay, that's bad, right? So like let's say we got this short and it was closer to like 50 here. Like let's say we got the short right here. Okay,
Yep.
this I wouldn't take. But because we're
Okay.
still so high in premium contextually from the rest of the range, I'm not going to
Yep.
say like this is bad. But this
Yep.
momentum is bad. So
Yeah.
momentum's bad. It's a very old gap. Um, but this is kind of one of
Yes,
those
I think.
instances where you kind of expect this gap getting inverse to work to the low just because the draw on liquidity is pretty strong. But I actually didn't notice this 15-minute before. I thought it was just the 5 and 15 lined up. So never mind. If we tap into this 15-minute, we're probably just going to react off that.
Can you go back to that 30? So this one is, like I said, let's pretend for the moment that it came through with momentum, right? Um,
Yeah.
aren't we now on the sell side of the, market maker model? And because I think you said before, you don't
Yeah. I don't
trade
want to
from
use.
the.
Yeah. This is a gap that I would never rate A plus.
Yep.
This is
Okay.
just a gap I would figure would work to the low. So like this is never a gap I
Yep.
would take, but this is a gap that I would use as like confluence, and like maybe I'd try it on eval or something.
Okay.
The only issue with it though is this gap, that 30-second, actually there's a 15-minute like in it, which I didn't realize before. So that this low actually is the 15-minute. So if we were to sweep this low, I wouldn't necessarily even need to see like price come to this low because we've tapped into unfilled liquidity on the 15-minute here. Um, looks like we're gonna maybe get this inverse. I don't know. This is
Yeah. I
weird.
mean,
We're
what do you
not we're
think
not
about those
delivering off
longs?
anything.
Yeah.
Um,
Right.
this is bad. Like because we didn't get the liquidity sweep and we left unfilled liquidity like super close. Like this is the 15-minute. So this is kind of like the same thing as yesterday, right? Like I don't want to short yesterday because we left unfilled liquidity here, okay? And then PA was just really bad. So what this tells me is if we're leaving unfilled liquidity behind and we're disrespecting bearish PD arrays before hitting liquidity, then this is just bad price action, which it's pretty obvious that it's bad price action, just like here based on this. And then if you look at, like the macro should take us to the next liquidity target. And when it doesn't, that's just a signal of bad PA. So I think that's something I missed in the notes last time. If price is not delivering from liquidity to liquidity and kind of like being like in a seek and destroy condition when we're violating, you know, bullish or bearish PD arrays, that's a symbol of bad price action also.
Gotcha.
So like here we
So if we
violated
had gone down and taken out that 15-minute swing low,
and then
right?
gotten this back up, yeah, it would have been a lot better.
Yep. Okay. All right.
That would
Again,
probably
it's
be
the
like an A
strength. The
setup.
strength of swept liquidity is right important. Like,
Yeah. And I mean, like, this is like an obvious gap in the macro. Like, this should work to the high, but the probability of it working is so much like it's like probably like 10% less than this. Like, this will probably work 55% of the time. If we hit the gap, this will work like 70% of the time or
yeah.
65% of the time or whatever.
Not 99% of the time
No, not
reliable.
99. No.
Okay.
Unfortunately, the only thing that works 99% of the time is whenever we're 2 points away from triple equal highs and entering right there with the 98 point stop. That'll probably work 99%
Hopefully.
of the time.
Hopefully.
Yep.
All right. Well, again, we appreciate it. We will
Yeah,
see you in a couple hours, and hopefully we have helped Price, be good for the afternoon session. So that's our
Sounds
goal.
good. Yeah. No,
exactly.
we got the
Yeah, thanks,
data level
Reliable.
though, so maybe we'll get a good PM target.
Yep.
But
Still there.
I'll catch you
Still there.
guys later. Yeah, I'll make sure to
All right.
get this video uploaded and get your notes to you.
Okay. Great.
Appreciate it. Thanks.
Yep.
All right. Thanks.
Peace out, guys.